All right, it is Richard Southern here. It's Good Friday, so the financial markets were closed, but the Easter Bunny, I guess, kind of came a little early this year. It was actually a good week for stocks, a much needed good week. Maybe we're starting to put a floor under those big dizzying plunges. To help make sense of it, we're joined by Greg Taylor from Purpose Investments. Hey, Greg, how are you?
Good, thanks.
Good. So I guess the big question is, do we believe this comeback we've seen over the past week or so? Is it for real, or are there more big sell-offs for stocks to come? What do you think, Greg?
Well, the market's starting to act a lot better than it had a few weeks ago. Volatility certainly dropped. The bond market's actually functioning a lot better. And those banks starting to stabilize. I think there's a lot of fear that the banks weren't going to function if small businesses started to really slow down. So the banks are starting to participate, do a lot better. So the market's functioning a lot better than it did a few weeks ago. There's still going to be volatility. We're not out of the woods yet, but it does feel like we're in a much better place than we were a week ago.
So what's driven it? You know, we watch the news, the cases are still going up. The news is still troubling, but investors are buying stocks again. Why is it, Greg?
I think markets want to look through the bad news. You want to see when things start to get better. It's almost a second derivative when things are getting less worse. For a while, people were pricing in really bad numbers, and it feels like day by day, people are starting to social distance. The shutting down mechanism is working. Things are getting better, and that's what stocks are looking for. They're looking for signs of things to get better, and that's what they're starting to price in and why the market's starting to rebound.
Oh, what is rebounding? What are the sectors that are coming back to life? What are the stocks that are doing well here as of late, Greg?
Well, the first sector to bounce was technology. And I think that's just because everyone is suddenly using way more technology as they're working from home. And I think that sector's really done well. We've had even the cable companies start to go back because everyone's using more broadband and internet to try and get on. So we've got a technology-led recovery, but now it's starting to broaden out. We're seeing some of the more oversold sectors bounce too. Energy's had a good bounce in the last 2 weeks as there's been some optimism that OPEC can actually end their price war. And as the oil price recovers, that's gotten the financials going again.
Greg, having said all this, you know, we're probably going to open our portfolios and they're not still going to look very good at all. I mean, the TSX is still down 16 or 17% on the year. I know you're not a personal finance expert, but you manage a lot of money at Purpose Investments. What advice would you give us who are still, you know, pretty bummed out looking at that portfolio?
I think you just want to take a long-term aspect here. We've had a lot of scary times in the last 15, 20 years, from the global financial crisis to the dot-com collapse in 2000. And people, you have to look long-term, that things do recover, the new normal gets priced in, and people do start to get used to it, and then markets go higher. So if the day-to-day moves can be too uncertain, just look back, step back, don't look at them, make sure that you can look a long-term view, and things will start to improve.
That was Greg Taylor with Purpose Investments, and I'm Richard Southern for City News.